Happy Friday, traders. It is 8:01 a.m. Chicago time on Friday, the 8th of November, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1635. It is the end of a week of higher highs and higher highs and record highs and higher highs. Coming into today, we do have a slight risk-off sentiment across the board. Crude has taken a bit of a drop, down 1.7% or a dollar, trading at about 56.15. Gold is off, and it's down to $1,461, $1,461, quite a bit lower. The bonds are off 17 ticks, but the DAX is off 36 points, and the NASDAQ is off 12.5 points. It seems everything is off today. Everything is getting pulled except for the U.S. dollar, which is up 14 cents. So overall, it just generally we would want to see money flows coming out of equities into treasuries, currencies, and so on, but we're not seeing that. We're seeing funds, money moving out of everything, including the yen. Now, the movement out of the S&P, for example, or the Russell, it's not that much. They're only off, a few points. The Russell's only down 8 ticks. So it's I would call it a mixed bag, other than crude. Crude, I expected yesterday with retest of 57.85, and if it held to 57.85, my expectation is it would likely turn over and get started testing towards 55.15 on the December contract. We'll see if that happens. Definitely, Saudi Arabia is trying to keep the price of crude up, but overall, it seems to have a hard time holding higher prices. I'm just reading the auction as it is, as it's showing, the price action as it's showing, and it's telling me that it's having a hard time sustaining higher prices in crude. So that's where we are. Again, it's we're still near all-time highs. Yesterday, the S&P got to 3097. 3097, just short of the 3100. We've covered a lot of ground here this week, and we finished in a neutral down day on what is a double distribution profile, or slightly double distribution profile. How's your week? Did you go after your goal this week? Did you measure your performance? Do you know what adjustments need to happen that you will be setting out as goals this Sunday? Are you doing those things you need to do to keep getting sustained, focused, deliberate improvement in practice? If you're not, it's just lost time. My goal, of course, is to try to see what I can do to get you to move towards profitability. In any case, that's where we are. The theme today overall, the market theme today, German trade surplus widened in September. Markets consolidated after recent optimism over progress in U.S.-China trade talks. There were some numbers that came out overnight. Nothing really great or terrible. White House spokeswoman Grisham says U.S. was very, very optimistic about reaching a trade deal with China. And then Kellyanne Conway, I didn't actually realize that she's still employed by the White House as an aide. No decision yet on the timing or location of signing a Phase 1 China trade deal. So that's really what's in focus, and moving forward, that's what we have to deal with. It is Friday after a big week up, so we may see some adjustment. It is not options expiration Friday. That'll be next Friday, so there's not impact from that today. Let's take a look at what was expected yesterday and what we got. The primary scenario yesterday is a test to the high, a test towards the high, and then I expected an impulse down for a test towards, if you recall, 77, and then leave a gap down here and bounce back up on the close. So test higher, fail, impulse down, move towards closing the gap. I expected responsive selling yesterday on new all-time highs, and then finish strong somewhere in the middle. Here's what we got. Pretty much what was expected: a push higher, a push down, consolidation, continuation, and then a push up into the close. We pushed towards IB low, mid, and the low volume node yesterday, which was all at around 3086.50 to about 3088. And we had a neutral day. We broke the high, the IB high, and we broke the IB low. This will be neutral begetting neutral the following day. So we have 2 neutral days in a row. What does this tell us? And let's take a look at this on a market profile chart. And I'll try not to do what I did earlier in the week, which is to kind of get into this a little bit too much. I turned it into almost like a course. But what we had yesterday, the yellow here, let me change the color of my pen because there's yellow already on the screen. The yellow bar is the initial balance. So this is the initial balance of this day. This is the initial balance of this day right here. And you could see that we opened in B period, tested down, and then back up on C period. Then we extended. We traded inside on D period, then E period. We traded inside again, then F period, traded up and down. That was on the news. This is F period that put in the high and the low of the day, and it broke the high and the low. So we had a neutral stance. The day before that, not neutral. The day after that, not neutral. This day, neutral. And then you could see the same thing over here. B period trades up and down. C period is inside of B period, which sets us up for a break. The second 30-minute bracket from 10 to 10:30 Eastern, being inside of the first bracket, generally tells us that there's balance. We're expecting a strong break, one way or the other, and we get the break in D period. So we push up in D period, and then we finally extend down. And what this is saying overall, in general, what this is saying is it's having a hard time holding one side or the other. The market is battling, and what is happening, even though it closed, which was kind of a surprise, on Wednesday, that it closed on the high side of the IB. This is more of what was expected. The little asterisk there in red is the closing price, the pit closing price. The expectation is it would close down, and I was looking for it to, if you recall, rotate down towards, after testing 65, to start rotating down towards 30.50. Yesterday tested higher, and then it rotated down and closed lower, which is what I expected. This creates a pretty good area to lean against. For those of you who've been around a while, I've talked quite a bit about finding, if you're long or short, in this case, if you're looking short from below, you're looking for a good area to lean against. What is the definition of a strong area to lean against? It's an area where the market has to really fight through a lot to get to the other side, and we want our stop to be beyond that area. And so, to me, any tests towards the 90, 91 into the 92 area, I'm going to look for a short early on and look for it to run down this thin portion and then finish filling the gap. We have a gap that was left between 77 and I think 78, 75. I'm looking for the gap to be filled right here, and then start working its way down into the 70s. This is the key plan for the day. I'm getting ahead of myself. This is a review portion, but the fact that we're getting neutral on all-time highs is saying that the market, despite the news, the market is really battling it out here and is not able to sustain these higher prices and ends up testing both sides of the IB. So that's where we are in the bigger picture, not the big picture, but in the bigger picture, at least bigger picture for me, because I'm a day trader, which I learned recently gets a lot of flack. Actually, a lot of people think day trading is impossible. It's not suitable for everybody, but it certainly isn't impossible. Looks like my reset is wrong here because of the time change, so let's change that. Sorry. Yeah, my reset's wrong. There we go. And then the VPOC. I don't remember where it is, but this VPOC is wrong. In any case, what we have here, what we have in the overnight session is really not much in terms of what the market has accomplished or tested. It is just pretty much sideways coming into today's session. Now, there's a little bit of liquidity starting to pool in here. Let me clean up the map a little bit. Little bit of liquidity up above. You could see that it's still pretty thick at 30.99 through 3100 above here, and that's likely to stay in place. Remember, this is the century figure. We do have a stock zone in the area. Next area up again, 95. Now, yesterday I talked about 95. If you replay yesterday's YouTube video, I talk about how 95 is a key area of resistance given the liquidity that was up there, and also a stock zone built on multiple measured moves. And that ended up being the high area there at 97. Still within the stop after some heat. Down below, we're looking at 73 as having some sustained liquidity, and 70, which has thinner liquidity. We'll see how that goes as we head down. I'm not so interested in the 73 because it's the MC point of control of this region, but I'm more interested in the 70 for a potential, if I'm short, which is what I'm looking for as the big trade of the day. If we start to move towards that 70, I expect to be short, and I expect to scale out in that area. Looking at the full depth beyond, this is the rhythmic data feed. Looking at full depth, really 60 has been loaded for some time. It's not that much liquidity, but 60 has been carried for some time now. Again, it's a strike price and all that good stuff. Let's take a look at what we're expecting for today and what the plan may be. Let me fix this. So what are we expecting for today in terms of our scenarios? This morning, the primary scenario in this environment is a response. I'm expecting an open auction. We're in range, expecting a response back towards the prior close, 86.87. I'm looking for a strong resistance short area here. If we get up there, it is rare that the market will give us this. It's rare that the market will give us this. So I'm stalking on the way up, and I'm looking at my my footprint or volume scope chart, and I'm looking for the inability to push higher. In other words, either icebergs on the short side, on the sell side that get lifted and just reload. But this is an example. This is one example of a good scale-in scenario. I'm looking for it to fail, rotate back down to the open, and start moving towards that overnight low and pushing down into that 73 area. Remember, this is the area that the MC point of control that I said would be a good scale out area for a push down into 70, and I expect a bounce at the 70. That's today. Now, it's Friday. This is quite a bit of range, 18 points or so, but it's on the sell side, and it's it's well within the statistical daily range, RTH daily range capability of this product. So I'm not too concerned about the range here. I'll take what I can get, as always, scale out and maintain a runner as much as possible. The secondary scenario is an open that actually pushes immediately and kind of takes that trade away, pushes into 74, 73, gets a small bounce, attempts to get back in the range, unable, sits sideways, and then potentially running back up into the range on the close. So this is a scenario where we have initiative selling into balance. Remember, balance is right here, this black line, for a bounce back up. This may, of course, continue lower, and because it's opening and falling out of range, there's a little bit more range left, and then the target would become 64. Makes it a tricky play to catch it, but we'll see what reaction we get at the 73.50. If we do get a bounce here, there's a little bit of a price action ledge there, and there's the MC point of control there. So this may be a good area for it to bounce off. We'll see how that works. And look, I'm not predicting what the market is going to do. I've talked about this quite a bit. I'm not looking to predict what the market will do here, but I am planning for what may happen if we get a push up and so on. The third scenario, which is also likely, is a test down, drive up, consolidation, drive up, and a squeeze of the shorts like we've seen over the last couple of days for a test of 3,100 before the drop. It'll probably push through 3,100 by a few points before it drops back off as hedgers jump in that area and kind of slosh the futures around. That's what I'm looking at for today. Now, today is also like Friday, right? This is the day where we'd like you to hit the like button on YouTube if you don't mind. It may ask you to log in. Please do that. And also next Fridays when I'll ask where you're from or where you're located. So hopefully you can look around you and see if there are other traders that are close by and help you connect. That is an important value for me, and it's one of the key mission points for convergent trading. Convergent, to converge together, to come together. This is a place for traders to gather and share ideas like in a prop shop. Good luck today. I'll catch you on Monday. Have a great weekend.